On September 25th, Schwab Asset Management made a major announcement regarding 20 of their ETFs. According to a press release on their website, Schwab Asset Management, the asset management arm of the Charles Schwab Corporation, today announced forward share splits on 20 Schwab ETFs. Forward ETF share splits increase the number of shares outstanding and decreases the net asset value or NAV per share. The share splits will not change the total value of the shareholder's investment. The ETF share splits will apply to shareholders of record as of the close of the U.S. markets on October 9, 2024, payable after the close of the markets on October 10, 2024. Shares will begin trading at their post-split price on October 11, 2024. And you can see here that SCHD is going to be one of those ETFs that's going to go through this split. It says the fund will be performing a 3-for-1 stock split with a record date of October 9th and a pay date of October 10th. There's been a lot of discussion revolving around this, and people have been asking me what kind of effect this will have on SCHD. So we'll take a look at what effects this will have on this ETF and what shareholders should keep in mind about the split. Now, the majority of time I cover stock splits on this channel, it's almost always a reverse stock split. This is when a company replaces existing shares with a smaller value of new shares. Companies or funds will do this when their share price falls so low that they don't want to be perceived as a penny stock. So what they'll do is, they'll do a reverse split, which reduces the number of shares. In other words, it's usually done by companies who have done such a terrible job that they don't want their stock to be seen trading for less than a few dollars per share. A company that's done this several times would be Armor Residential. Their stock keeps falling, and as time goes on, they've done some pretty intense reverse stock splits to ensure their price doesn't fall into penny stock territory. You can see that last year they did a 1-for-5 reverse split, which means that for every 5 shares you owned of their stock, you would now only own 1 share. However, SCHD and the rest of these Schwab ETFs aren't doing a reverse split, they're doing just a normal forward stock split. A forward split is when a company divides its stock into multiple shares, which effectively lowers the price of each share without changing the fund's market value. Despite these changes, the total value of each investor's holdings remain constant. The decrease in price per share precisely offsets the increase in the number of shares. When a company, or an ETF in this case, performs a stock split, the process is automatic for shareholders. The additional shares are credited to shareholders' accounts without any action needed on part of the investors. So if you currently hold SCHD already, there's no action that's going to be required on your part. It's understandable why some people get confused by this process because stock splits are becoming increasingly rare in today's world. According to a chart by Investopedia, you can see that stock splits were very common about 20 years ago in the early 2000s. As time has gone on though, splits have become much less common. There were over 500 splits in 2001 compared to just 29 last year. The tech boom of the early 2000s probably played a big role in the number of splits, but even back in the 90s, splits were a lot more common than they are today. But going back to the case of SCHD, I think looking at an example would be the best way to understand what's going to happen on October 10th. An example of a 3-for-1 stock split would look like this. Imagine you own 1 share of a stock or an ETF that's currently trading for $150 per share. In the event of a 3-for-1 split, your 1 share now turns into 3 shares, with each share now trading for $50 each. The total value of your investment didn't go down, you still own $150 worth of this stock. The only thing it did change was the stock's share price and the number of shares that you own. So whatever SCHD is going to trade for on October 10th, let's say $90 per share, then the next day your 1 share of SCHD will now turn into 3 shares and the share price of SCHD will go down to $30 a share. You're not going to lose any money, and the dividend distributions will also be adjusted in correlation to the split. So that might look like this. SCHD's last dividend was for about 75 cents per share. Assuming you own 1 share, after the 3-for-1 split, the next dividend could be for 25 cents per share. You'd still collect the same in dividends, hopefully more considering it's a dividend growth ETF. You might be wondering why companies or ETFs even do splits in the first place. If it's a thinly traded holding, then doing a split increases the trading volume. In the case of SCHD though, a low trading volume isn't an issue seeing how millions of shares are traded on a daily basis, but it can benefit smaller companies or funds. A second reason is that it attracts more investors. If the share price of a holding is hundreds of dollars, that discourages smaller investors from buying into a holding. In the case of an ETF, where the company makes money based upon assets under management, you want investors to have easy access to it. If someone has to save up $100 or $500 to buy just 1 share of your ETF, that's likely going to turn away a number of people from holding it. Splits make it so that less money is needed to start investing in a fund. A good example of a company that's done many stock splits throughout their history is Walmart. Their stock just recently went through a stock split back in February of this year in which they did a 3-for-1 split. That's the exact same split that SCHD is going to go through later in October. When Walmart did this, it brought the share price of its stock down, but it didn't result in shareholders losing any value. If we look at the stock chart for this company on Google, you can see that there was no negative impact to their stock share price when the split occurred. Google, Yahoo Finance, Seeking Alpha, and basically every stock website that exists automatically updates their information to show the new share price. There won't be any massive nosedives in share prices according to these charts when the price gets reduced. If we also look at Walmart's dividend history, we can see their dividends were automatically adjusted for this as well. Going to Walmart's website, we can see back in 2022 they were paying 56 cents per share before the split. However, financial websites like Seeking Alpha are reporting they actually paid a little under 19 cents per share that year. 18.67 cents multiplied by 3, which was how much the split was for, comes out to that original 56 cents. Holders of Walmart stock didn't collect less in dividends. Their 1 share turned into 3, and owning 3 shares paying 18.67 cents each still resulted in them getting a reported 56 cents. I know it might be confusing, but keep in mind that when splits do happen, you will not be collecting less dividends. Your distributions will remain the same. So to summarize everything, investors in SCHD don't have to worry about anything. When the split does go into effect, you won't lose any of your investment. If you have $10,000 invested on October 10th, you'll still have $10,000 invested on October 11th. The total dividend distributions you'll receive will not go down, and neither will the dividend yield. Even though the dividend amounts will be less, you'll still own more shares, so you'll still get the same amount, potentially even more next quarter, as SCHD is a dividend growth investment. The split is overall a good move by Schwab because investors won't have to save up as much money to buy new shares. Instead of needing $90 per share, you'll only need around $30 per share instead. That'll attract more investors to this fund. And it is a really good sign when a stock or an ETF does a split because it just shows that the investment has done really well. In fact, it's done so well that its share price has soared so high to the point that newer investors with less money might be deterred from investing in it. So they're going to bring down the share price to make it more accessible for everyone. As more brokerage platforms allow fractional purchases, some people have speculated that splits might eventually become a thing of the past someday. I'm not sure I agree with that, but they're definitely more rare today than they are in the past. So yeah, if you hold SCHD, don't worry and don't sell any of your shares. Nothing bad is going to come from this split, which is all that needs to be said at this point. Thank you all so much for watching today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.